Okay, traders, how are you going there? Just let me know if you can hear me. I've got my big microphone today. Normally I just use that to do some videos. It's a bit better than the headset, but I thought I'd try it out today. It was sitting right in front of me from Friday. Hope we're doing well. Market's getting a bit choppy today, on the SPY at least. Ah, Bobby, how are you, mate? Hey, Ben. All right, and there's a video nice and clear as well. I've got mine, when it comes up on my phone, it says restricted mode, so I think that's got more to do with the phone than actual anything else. Hey, Nathan, how are you, mate? All right, so let's get into it then. Welcome to Trade Setup. And the live stream, it's the 22nd of Feb, so getting to the end of another month. And the market's still, I mean, for any of those bears out there, g'day Pete, any of those bears out there, there's no big sell-off at the moment. So Europe was strong on Friday night. They bumped up a bit, and they've had some good, I think, in manufacturing data, especially out of Germany, which supported the Dax was up. I think the FTSE was relatively flat, so a bit of a mixed bag overall. The US actually opened up strong and got sold into intraday, which is interesting. I think they've done that the last few sessions, so there might be just a bit of, I'd suggest, more profit taken than anything else. People just locking in some gains. You've got the US dollar heading south again. It's pushing into support. I would expect that's more rangy than anything else. I don't think that you can expect another big sell-off in US dollar because of stimulus. I mean, it's well and truly factored in. The numbers have been thrown around the table for months now. So if you haven't got short already thinking it's going to be a sell-off, you probably won't after the number. It'd be more likely it'll pop lower and it'll squeeze, take out a few levels and then squeeze everyone back out again on the rally. Buy the room, sell the fact type of thing. So, interesting night on Friday to end the week. We got smashed on the ASX, got knocked around a bit. So, bit of bargain hunting today, a bit of, like I said, a bit of chop on the SPY. It's, flushing people out. We're just sitting around a level. May just want to see what the US does tonight. So it's sort of the, higher Aussie dollars capping it a bit. Not only that, there would be some bargain hunters out. And then on top of that, if you really drill down, like I said, the US, from what we were saying, anticipating on the ASX, it was going to be a down night. And Asia was down as well. But Asia bounced straight back after we closed at 4 o'clock. They, the Hang Seng, which I follow quite a bit, rallied quite hard from those lows, off the lows. So, people were probably expecting a weak European session, a weak US session. Now, US, if you just look at the numbers, ended flat. So it wasn't too bad. They probably brushed aside weakness, but they actually opened a lot higher and sold off during the session. So not too positive. They just followed on from the European session, which with the Dax was up over 100, I think, in the end. So, yeah, it was... It's a bit of a mixed bag. I mean, there's a lot of people still, like I said, just waiting for a bit of a sell-off, but it's not coming, and it's just that old thing. You're going to get volatility. You're going to get those flushes like we've seen on the index. The ASX will flush people out. Everyone's bailing pretty quickly. They'll drop the hat, and then it gets brought back up again because, realistically, where are you going to put your funds? I mean, the major flow of funds around the globe, really, where are they going to put it bar equities? There's nothing else that's paying out any sort of yield apart from Bitcoin, maybe. But that's another story. So we'll get into. I just want to go over the US dollar mainly, some of the currencies, and look at the commodities, what they're doing, namely crude oil, copper. Copper went like a rocket on Friday night, straight up through that $4 mark. Now, if you're going to jump into copper now, I'd suggest it's late. I'll be waiting for a decent correction, decent pullback before jumping into copper itself. Copper stocks. Yeah, we'll have a look at some of those, I guess. Anyone that's got something to do with copper, any sort of copper shares that they want to take a look at, especially on the ASX, whack them in the chat and we'll have a look at those. So I think it's an interesting it's a really interesting push. Probably a bit of a flush more than anything else. So we'll have a look at some of those. Anyone that's new, it'd be great if you enjoy what you hear to leave us a like and help us spread the word for Trade Setup on our YouTube channel. And then fantastic TMZ. I'll actually look at that. Help us spread the word. Make sure to subscribe. You'll see YouTube channel at the bottom right hand corner of the screen there. Subscribe to us there. Follow us on Twitter and Facebook. mainly Twitter. I mean, Twitter is where we do most of the bulk of the stuff I post up there. Any videos that go out to our database, we upload it to YouTube. So if you subscribe there, you'll get a notification from YouTube of anything that pops up there ahead of time. We only just do general advice, no specific advice. So don't expect too much from us apart from our own views and opinions. So let's get into that at the moment. Let's the XJO. We'll just start there. This is the 30-minute. We'll start with the daily. What if I do it here? I'll just go across to. Might go across to here. It's probably going to be delayed 15 minutes, but that's good enough. So this is the daily, and you can see there's an inside level here on the ASX, which I think probably maybe the market's struggling with a bit. But then you've got, the highs, where last time we drilled through the highs, and then bang, that was it. You can see this little run up here. It was on the 20th of Feb, and then the next 4 or 5 days just wiped up a hell of a lot in the index. So I'm not suggesting we're going to do something like that, but it's this rally up here. It's getting a bit long in the tooth. There's a lot of shares around that I'm struggling to find some clear setups, something that's not extended. So if the market takes a bit of a turn, there's a lot that's going to get hammered because there's a lot of people in the market at the moment. Loaded up in the market, I guess. So with the ASX, potentially this level in here, it's around 68, 60, 69, more like 6,900. It's touched on through there, fail off. It doesn't mean it's just going to fail again. It's just because it's backed off from that level, finished back below. It just means we might get a bit choppy up there. But as long as this trend upholds, then I would expect we're going to trade to new highs, barring anything out of the US. A major sell-off in the US. But we'll go over those. We'll go over those in just a minute. So that's the XJO. This to me could just keep grinding high. You expect the flushes lower, maybe a flush, and then bring in some more buys, and then just sort of grind its way up. Now, the problem will come, I think, if we start to jam up through into new all-time highs and back down pretty quickly. I'll be a bit concerned, especially if this trend line starts to break and we start to attack, that, and even back down to 6,900. I think it's going to be a bit. We could see a decent sell-off because there's a lot of fuel lined up here to get squeezed out. Even if if shares are the only spot to put them, put your funds for yield because you're not going to get anything. Bonds, Australian bonds are close to zero, US is zero, European for the bigger flow of money. If they're searching yield, they're probably only going to get it from shares, but that's only going to last for so long before people start. It's basically you're running out of people to keep diving in and pushing prices higher and higher and higher. There's been a lot of that. With the stimulus checks are going straight into the market. People are sitting at home. All this talk about there's more and more people joining up. Is it not Reddit? But anyway, new accounts to start up and they're trading the market, potentially supporting it. Now, with the vaccine starting to kick in and people starting to get back to the norm, there's maybe going to be less and less active traders in the market. Well, those numbers would start to decrease, you're thinking, which means that that's going to lead to less and less people willing to just dive back into the market. So I'm thinking more fuel starting to come out more than anything else, more than maybe, a turn of events where, I don't know, now we've got the bird flu, that might kick in. But anything, out of the ordinary that comes in, like we had that COVID sell-off, something like that, I'm expecting more, the running out of fuel to keep pushing this market higher. But we'll see. I do think we need some sort of corrective move. Maybe in the ASX, I am expecting a push into new all-time highs, but we'll see. With the US, we'll just go over to the 30-minute. So you can see last few sessions have been, the gap down here got bought up, gap down here got bought up, and this time we've actually pushed up into the previous high and pushed down into the weekend. The Dow, similar type of thing. It is, it's not as good a rally. If that's proper English, we've had this sort of good run up here, and then we look to be more going sideways. You can see this action here is more sideways than anything else. It's not up. Okay, whether the S&P's showing the same sort of thing. So that action there is more sideways. Whether it's going to be range bound and we're going to break out of that range to the top side again and push up, I don't know. But I'm sort of banking on we need to flush some buyers out, because also if we'll just quickly have a look at this daily chart. I just want to look at something. Yeah, look, not so bad at the moment. I do think we're going to have a bit of a pullback, flush out before we could potentially reset and go again. The Nasdaq on the daily potentially running out a bit of, whether it's running out of steam. When I say running out of steam, I mean running out of steam to the upside. It may need to just pull some people back out of the market, put them on the sidelines and reset, but still can maintain that trend up. It doesn't particularly mean just because we're running out of steam here, we're going to have this major corrective action and get poleaxed. I don't particularly mean that. I mean more of, if we just look at it from this trend, if that's the trend up, maybe we have a bit of a pullback. We come back down to 13,300. That's a couple hundred points down from here. That's going to probably get a few people concerned. You're going to see the news articles start to bump out with all the bits and pieces, all the negative news to try and create that selling frenzy. But I think at the moment, unless there's a particular reason to, it's going to be just another pullback. All right, unless of course we start to get a lot of heat come out of the market, but I think that's going to be triggered by something. It just doesn't make a lot of sense where people are going to start to turn, like they've had many opportunities to really hammer the market down, but they haven't. It's been soaked up, it's been bought back up again. So we'll see how that goes. Let's get on to the US. Actually, we'll do Europe. Europe, especially on the DAX, doesn't look as flash to me. So this is the Dax Index. That's the longer term uptrend. If you're just taking from that low and that low, so potentially it could chop around here. This is on. We're still on the 30-minute chart. It could chop around here and hold up, above say 13.8, 13.9, 13.850. Say, just hold these lows and then take off again. I mean, there's no reason why it can't do that, because it's just this shorter term trend up. It's failed, it pushed into new highs, started to fail again. I thought it was actually going to break down from there. It's tested it 1, 2, 3 times. Okay, you're going to get a bit of heat come out of that market, but over the longer term, we'll just go to the daily. It could be just retracing. Now, actually, looking at that, if that's the case, if that's your longer term trend, there could be a decent move, a decent corrective move down to sort of this zone in here, which is more like 13.3. So a 600 point move, which the DAX could do pretty quickly. It doesn't take much for the DAX to get knocked on the head 100, 200 points, but still maintain that longer term trend up. So I think a lot of these markets, they get tentative, but the uptrend is well established, on the back of everyone's waiting to see what happens with the vaccine. The vaccine's coming out, we're getting back to the norm. A lot of that is factored in. You've got to realise that it's not just because the vaccine's starting to, kick in. People are getting back to work. The economy is going to be all gangbusters from there on in. It's a lot of that is already factored in with prices. And if you start to get that, especially in the US, and we start to get inflation, inflation means it could drag up the cost of debt. And if you drag up the cost of debt in the US, you're going to have people start to see that and looking at inflation. I mean, I know the US has said they're not going to raise rates. They're not going to raise rates, but if they're forced into doing it, that's going to probably cause a bit of concern, especially if you're loaded to the hilt on shares. Okay, you're always going to look for, if you're in a position, you're always looking to what is going to happen. I've got to get more gains. I'm looking for more gains. I'm looking for more gains. What's going to keep pushing it? Now, if you start to view that inflation is going to start to cap more gains, what's the point in holding shares? Especially when you think there could be a sell-off because of inflation. I don't want to be the last one to the door. I want to be one of the first. Maybe taking some risk off the table. And if you start seeing that filter through the market, people start to take more and more risk off the table. That's what could create that sell-off. But again, it's all going to be a matter of time. I think we're due for a sell-off. I don't know everyone else's opinion. I just think this market's gone too hard for too long, and everyone's in the market. Everyone's expecting this, that, and the other. It's really hard. It's really hard at the moment to see these markets continue to press higher, especially in the US with high valuations, and they just continue to go higher. So we'll see. We'll look at the US dollar now. US dollar, I've got this major support zone down at, it's from around the 88 89, so below around the 89 mark. We can see that it's pressed down there in 2018. It's found a bit of work down there, and then it's bounced off and we pushed all the way back up again. I'm on the daily chart here, and then we've come, this is on the, I was going to say the GFC. I don't want to get rid of that just yet. Let me just take a few lines off. All right. So this was in February. Got bought up in a bit of a safe haven, and then I think the market was looking at that thinking, well, okay, what's going to happen? It's going to be QE. You're going to flood the markets with dollars. So the dollar doesn't need to be right up here. It's got smashed after that. A bit of a sell-off. So that real devaluation of the US dollar sent markets lower. Well, the US dollar a lot lower. Now, whether or not it's going to respect this uptrend, we've had this uptrend from here. It's going to respect the break, or we're just going to get some sideways action. I wouldn't expect the US dollar to get sold straight down from here. I think we've got to start, get the stimulus into the market and start talking about more and more stimulus. Because you've got to remember, I don't know, anyone sort of understands a carry trade. A carry trade, when you're buying for low yields, expecting yields to go up in a certain country, not, on a certain currency, I guess, with respect to, another economy, for instance. So you're looking at the US dollar and you go, okay, they're near zero. Okay, what's the potential that they're going to get interest rate rises? I know that the Fed Reserve said we're not going to do that anytime soon, but like I said, if they're forced into that, there could be a bit of a carry trade into the US, knowing that they've got the vaccine coming through, buying with low yields, expecting them to make money on the US dollar position. Okay, making money on the US dollar position, like I said, the carry trade, that's buying into US, compared to the Aussie dollar. What's the Aussie going to do? Maybe that needs a bit of a correction lower. So buying buying the US dollar, selling out of your Aussie dollar, because you think the economy in the US is going to bounce back a lot quicker than the Aussie. Probably, I think we're doing okay at the moment anyway. But maybe Aussie Euro. Sorry, I'm getting myself confused. The Euro. There's talk recently a bit of selling into the Euro and buying US dollar, as a default, because the European economy wasn't doing too bad. US potentially is not doing as good as we thought, but I think longer term, I think the European is not going to do quite as well as the US, meaning there could be that carry trade into the US, buying that US dollars for the yield, potentially if you're going to get that inflationary effect compared to the Euro. So anyone that's sort of holding bigger funds in Euro may be thinking, well, economy-wise, we're probably going to be doing better in the US in the near term than the Euro. So maybe I want to hold funds in US dollars as opposed to Euro. So you're selling the Euro, buying the US dollar, which means US dollar finding some support from a carry trade, from inflationary effects, all that sort of stuff. So that, for me, I'm looking at this US dollar. I'm expecting this to hold, that 89 zone to hold. I don't care if it really flushes through like we saw here, flushes through and then bounces back. But I'm sort of expecting that in the near term to hold. I think there's too much. I know there's a lot of people talking a lot weaker US dollar. US dollar should head south. A lot of pressure on it. I think the fact that and this is analysts. Now, analysts don't worry about the market too much. They just look at the US dollar. It should go lower. We're expecting lower because of these fundamental reasons. Now, those fundamental reasons have been factored into the US dollar, in my opinion. That's what traders do, not analysts. Traders will factor it in. They will take a short position on the anticipation that the US dollar is going to be flooded. Well, when we're talking this move from here, this consolidation through here, a lot of people thought this ramp up in the US dollar, it's a safe haven. People were starting to buy it here because of that. We're going to ramp up for another safe haven move back into these highs, back through 103. But the fact that they were going to flood the US dollar and you got the bigger plays were negative to US dollar, that's early. That's factoring in stimulus. Now, whether or not at this stage, so back here when you're factoring in stimulus, we didn't really have much of a vaccine. We don't know what the vaccine is going to do. It hadn't come out yet. So stimulus is the factor to really continue to drive or pressure that US dollar down. Now, if the vaccine comes out, well, it is out. If it starts to take hold and we see everything start to get under control, there's no more need for stimulus. You wouldn't suspect the stimulus is going to be in the system. So more than anything else, people will start to be closing those short positions. That's what I'm expecting longer term. So really, the US dollar could easily flush down through this 90 zone. get a bit of a head of steam on an intraday basis, say a 30-minute hourly charts, and start to push down here. But I think longer term we're going to start to maybe retest that, might flush that zone and bounce back again. We'll have to wait and see. I've been wrong a few times before, but I think with the vaccine flying out into different economies, starting to support a recovery. US dollar, I don't think there's any real need for further stimulus. They've got a bit of a problem anyway with the amount of US dollars in the system. So I don't think they're going to be tentative to start flooding any more than what they've got coming soon, and what they've got coming has been factored in. So I'm finding it hard to be really bearish on the US dollar anymore. I think more than anything, like I said, range bound action, whether it's between 90 and this sort of top side above here around 91, 92, or whether it's between 89 and 92, but more range bound around these sort of lows that it's traded for through previously. Now, longer term, whether it starts to have a bit of a rally straight back up and starts to find more significant selling pressure, I'll be interested to see that. And that might be a bit of a bounce on inflation. Inflation doesn't really come out, and then any of those buyers that get squeezed back out of the market and it pushes back down. So in saying all that, what does that mean to commodities? If we take even just a bit of a sideways action into the US dollar. Now, start with gold. I've never been too bullish on gold for a long time now. I think there's too many people that think gold is a safe haven. Or an inflation against, a hedge against inflation. I don't know how. I mean, I probably don't understand the fundamentals the best as I could, but really with gold, I'm struggling to see any reason why gold should just take off, because with respect to a safe haven, I don't think there's any real need for a safe haven. There hasn't been for quite a while, because we just haven't got that sell-off. And if anything, the US dollar, I think, is trying to find a bit of a base, which would mean higher prices on the US dollar means pressure into gold and potentially lows. And that's why I think we're getting these bounces into gold. People are buying it, any sort of negativity into the market. But if you get a big sell-off into the market, it'd be interesting to see what the US does do, whether it gets a bit of a bounce on a bit of a safe haven spurt and starts to squeeze out some shorts, which wouldn't be good for gold either, because US dollar's rallying. So, I'm not bullish on gold. I think we've held this 1847. I think longer term, if we get back to I probably should just clear this up. Let me just delete all this. You can see that the market's been held down. We've taken out these lows. Well, we're trading right at those lows there. Whether we're going to continue push through those lows. If you go back to we'll go to a daily, because the daily's got some good levels. We're trading here now where it's traded through before, so longer term, potentially that could provide a bit of action, whether it's going to break through those lows. I think the uptrend, if you're looking at the uptrend on gold, there's support all the way down here, which could be around 1580, probably discount that one. Next level where we could find that trend up, running out of steam, potentially down, just depending, down somewhere around the 1700 mark. Now, that would go into this zone, which it's traded in this zone before. It's chopped around here before we had this expansionary phase higher. Whether it just touches into that zone, which could be a bit, I'm expecting a bit lower than where we are. That's what I'm expecting, more sort of a push into that zone, maybe to find some buys, see if they can start to support it. You can see we traded up into that area, had a big sell-off, traded up and through the previous highs, chopped around here and then took off from there. Whether we come back into that zone, squeeze out a few more buys and then start to reset, respecting this trend up here. If worst case scenario, we don't respect that trend up and it's a longer term trend and it's a move lower down to 1550, and that probably would, that you would be seeing the US dollar. You would expect US dollar really starting to appreciate and squeezing out some of these shorts from a long time that have been really settled into that US dollar. Gold, Aussie gold. I set up an alert a while ago just to see. I really did think it was going to push into that zone between 22.79 and 23.25. It's now extended through that area. So potentially it's got a bigger move on the cards lower. To me, that would be more of the same. You know, the edging down in the US dollar. Sorry, edging down with the US dollar. Gold sort of, you know, can fluff around, but the Aussie dollar going up, and it's more of Aussie dollar being supported by that risk on tone. I mean, it's hard to expect more and more of that, considering equity markets are potentially due for a bit of a flush lower, which would mean that they flush lower, a bit of a risk-off scenario. You would expect that a bit of selling into the Aussie dollar, you know, buying US, which means Aussie gold is getting, you know, sold down slightly, and it might mean that just it's harder to really push lower, because you got to remember it's a cross between the Aussie dollar and gold itself, and gold is a cross with the US dollar as a base. So any sort of move down into the Aussie dollar would suggest a bit of a rally into US dollar. It means gold is moving down. So you got between the Aussie and gold cross, both of them are sort of finding some selling pressure, which means it's sort of more neutral and fluffing around in this zone here. Okay, does that make sense? Now we'll go over to crude. I wanted to get on to crude and copper. Now oil, I've been more bullish on this for a while, purely because, well, two things. Crude can get supported easily, you know, manipulated, you'd say, with just dropping production levels, supply, you know, really starting to constrain supply at a time when demand is starting to lift because economies are coming out of, you know, a major pullback. So I'm looking for crude to just continue on with that trend up. You're not going to get a move straight up without swings and roundabouts, obviously, and I think we're just getting at it now. We've got that. We had that push up. I was looking for a push above 60, 61. We've got that, and we can see intraday we've had a bit of heat come out of that move. So it's whether or not it can hold this level in here, which is around 57.30, say. Whether it can hold that on a daily basis, we might get a flush of that level, like we saw something like through this, you know, that zone there. It might take a few days to play out. We start to get some sideways action. Lower highs coming in, so lower highs are starting to pressure out, or trying to pressure out those buyers, but it's still looking to hold that trend up. So if you get this sideways consolidation, that's not so bad. If we get that consolidation above 57.30 and start to hold, then I think that's going to have another little spurt high, and we're going to push to sort of 64, 65, 66 area, which from a daily basis is these previous highs from way back in April 2019, and probably, you know, January 2000, just before we get that major sell-off and prices went below zero. It'd be interesting if we ever see that again. So yeah, I'm expecting that trend up to remain. Don't know what that's going to do for. I haven't really looked into energy stocks at the moment. I don't fancy them too much, but I think crude itself is it's just flushing out some buyers now. If we just drop down to a 30-minute chart. So a weaker US dollar is going to support that. But don't forget, crude can rally quite hard, and it did. It rallied quite hard even when the US dollar is creeping higher. So the pressure from the US dollar, as you know, crude oil is based in US dollars. If the US dollar does rally, crude can still, you know, tick its way higher. So I'm looking at more of just pure price action from crude. You know, flushing of some levels. We've just got this run up here. You can see that was from February. Push up here, pull back, found some support, took out the highs, and then come screaming back down into it just to flush out some of these buyers. Whether we chop around here and we have another leg down into that 57.30, which I was mentioning from a daily basis, or whether we start to hold in here, which makes, you know, it does make sense to hold there as well, flushing out. And that the fact that we've gone through this low of 59.30, we pressed below and we've reacted up off this area here. It makes sense that we could actually hold that area and start to get another, you know, intraday leg up. But for now, I think we've still got some work to do. I'm sort of more looking for, if this level is going to hold, some lower highs pressuring in, the market rejecting it, and then once we start to get more confirmation that level is going to hold, sellers will take the footer off the gas and we'll look for a higher low, and then we get that higher low somewhere in here potentially, or even a bit earlier. I think we get that expansionary phase back up through 62.30 or so. Now, if it needs to make a deeper correction, you're going to see that pretty soon. I would expect over the next, potentially tonight, if we start to hold some lower highs and we start to really we're going to press down in one foul swoop. So there's going to be enough buyers that have held this level, that have been buying it up off this level, that get squeezed out, and the market's going to just, I would expect, extend straight into that 57.30 area and start to target some stops on that level. Okay, but I do think that longer term, we're going to hold that longer term trend up. It may just need to do a bit of work. It's just how much work it's going to do first. Okay, what have we got next? We're looking at copper. Now copper, even that's extended. What are we now? 30-minute chart. So that was today, wasn't it? I haven't looked at copper this morning, but I wouldn't have expected that level. I mean, price action wise on copper, that was great. You know, we're starting to hold it just into the close on Friday. Price action wise on a 30-minute chart, yeah, it looks great. It's probably just setting up a bit of a long squeeze for later on. I think copper is well and truly extended. And if we take it from a daily basis, just look at where it is. You know, that looks a bit like Bitcoin, doesn't it? You've got major levels just in here. Now, whether we can extend up into this zone without a pullback on a daily basis, look, for me, if I'm trading this here on the daily charts, wouldn't go near it. I want to see a pullback. I want to see if a pullback and we can hold in this zone, you know, somewhere between 385, 384 and say 4, we can have a pullback into that zone and start to hold it on a daily. If we start to do something like this, yeah, then great. Maybe you want to buy it and you look for that run up into these highs at 450 or above, which is the previous highs on a daily basis. And maybe you get something chopped like this. But for now, I wouldn't be going anywhere near that buying because it is well and truly extended. And anytime the markets extend, I'm just waiting for that heat to come out. Come out of the action, squeeze out some buyers, put them back on the sidelines. And if it's going to reset, it's going to reset and buyers are going to soak up these pullbacks. But if you're buying it here, and this is the move where we get a big beating, for lack of a better term, we get some sort of pullback like that, and you think, okay, I'll just wear this pullback, and then you get a deeper correction of this leg up here before we reset at a higher level and just power up. You know, on the bigger time frames, we don't know. So that's why I wouldn't be buying that extension up there. You've got to be really, really nimble on an intraday basis if you're going to buy that leg up there. And looking at the 30 minutes actually opened, like I said, it's opened today and popped up. I think that's just a bit of a clean out. You're going to get, before the bigger markets open, like in European markets open and the US markets open for trade, I wouldn't be surprised if this is a bit of a setup and we get a bit of a pullback just to squeeze all these traders back out. Because it really does need to put some traders back on the sidelines. I mean, lo and behold, if this keeps going, so be it. Okay, that's probably, we can touch on silver because I know there was talk, where we go? Talk of, I'm going to touch on silver and bonds, US bonds, just before we go. Silver, you know, with all this shorting frenzy, you know, the GameStop, and everyone was saying, okay, we're going to have a big short squeeze on silver as well. I still don't see that. This is where it was. It was about this area when it gapped above, and I think that was the start just over the weekend when everyone was talking about it and everyone was starting to jump in and nibble at silver. It's too big a market to get played like that, I would think. And you can see it's actually dragged in some buyers. They all started to chase it higher. They've been squeezed out since, and if they're still holding, you're holding a losing position. And whether or not the market's going to actually get back up through this level or it's going to roll over, at the moment we've got sideways action. And you can't deny that. We've got this sideways price action for now. Whether it's a bit like gold and US dollar rallies pressuring silver lower, we'll have to wait and see. But for now, I don't see, I can see the longer term price action doesn't look too bad. Just go to the daily. Now, the daily actually looks pretty good, especially after this break. I think it's just got a bit of work to do, and I'll be skeptical about buying it in that zone just for now. I wouldn't mind seeing a bit of a pullback, retesting this area around 24.15, thereabouts. You know, a bit of a reversion to the mean. So I'm always looking for that reversion to the mean, just to clean out a few early buyers and put them back on the sidelines and then start to ramp up again. So that's what I'd be looking for. So if we're looking on we'll go to the hourly chart. I don't know what it keeps doing that. That's a bit of a flush lower. Just break the bottom side of this area here. You know, come in, break out, and then start to ramp up. And if we can get something off that level, then I think silver could be a bit of a goer. And I'm looking at all this. I like to see things in two moves. So you've got a run up here one move, that's sort of the secondary move, and a bit of a bounce, and that secondary move lower, that's going to clean out all these buyers from this zone, put them back on the sidelines, but then hold that trend up, reset, and up she goes. That's what I'll be looking at on silver. Just over to last one, just look at bonds, US bonds, because obviously it's a big talking point at the moment. They are rolling over, meaning yields are starting to drift higher, meaning it's pointing to inflation. There's a lot of people who would be closing out of bonds as well. If you've been long bonds because you're expecting over this longer period of time, the US dollar to devalue, interest rates to stay low or even go lower. If you are thinking now and you've got a long bond position, you're expecting potentially inflation to start kicking up. You don't really want to be holding bonds because it's the inverse. Yields start to go up if you're anticipating that yields are going to go up. Yields don't need to go up. It just the anticipation of it could be driving bonds lower. Okay, because they're anticipating the market's going to want a high yield. So if you're going to go long here, you're probably going to demand a lot higher yield than that. So the spreads are going to go out. Anyone that's long and seeing the spreads go out, they're probably going to get out, which means selling back into market and forcing prices down. So if you're going to go long, you'd probably be a bit more wary with all this talk of higher yields, meaning lower bond prices. So we'll keep an eye on that. I think it's starting to show some signs of a bit of a breakdown. We're on the daily, so it'd be interesting to see where that goes to. Whether we're going to start to find some buying in here, a bit of a bounce. But if we do get a bit of a bounce, is it just going to be bounce, lower high, and then pressuring a lot lower, back down to this area here, or what? I think you need to see some numbers, some positive numbers come out of the US for this to really get a bit of a wiggle onto the downside on bonds. When they get a wiggle onto the downside, yields, they're anticipating on the 10-year, yields are going to go up. If you see the shorter dated ones, I think it's 2-year, saying the same sort of scenario, then they're anticipating there's going to be rate rises in the coming 6 months or so. Which, like I said, I'm expecting to put a bit of pressure on the downside into equity markets, just as we see some risk come off the table. All right, let's get into some shares then. Any questions there, guys? I'll probably get sidetracked quite easily there as my mind starts swirling around in different directions. But we'll see. So we've got TMZ as a copper play. Actually, I'll go over here. Awesome. Just checking a couple of things while we're here. Daily. So yeah, that looks. Who put that up? Manny. That looks nice. So if you had a bit of a gap up, and you can expect a gap up on this day, I'll actually just go to a gap up on that day. When it gaps up, I know it's positive. It's probably I'm guessing it's on the back of news. Let me just see something. Yeah, on that day it had a few. Oh, maybe not. Be interesting to see when that news come out. So the day before, on the 28th of Jan, the 28th or 29th, what day is that? The 1st of Feb. So the end of Jan, TMZ has had something which didn't really do anything the next day, and that was early in the day, 9:43. So before market open, on the 29th, 28th, it had some news. Didn't do anything, and the very next day it got gapped up. What happened on the day after here? Options, performance rights. Yeah, a bit sus to me. A bit sus. I never like to see these, when you see gap up on no news on that day, something's coming. So if you get this sort of thing when you get a strong open and you actually long that, I'd be inclined to at least take some risk off the table, because you don't know what's going to happen. You don't know what's driving the news, capital raising or whatever. They tend to, generally on a cap raise, if it's going to preempt it, we all know that people know stuff which they're not meant to, and they're buying into stock prior to any news announcement. ASX don't seem to be doing anything about it. ASIC don't seem to be doing anything about it, but it does happen. So you do get a lift in volume and a lift in price, and then lo and behold, you get a cap raise comes out. So I'm always skeptical when you get these powerful moves up. You know, like this, a gap up on the day, it finished on, not on the highs, but it finished in the green. I'm always skeptical that something's in the pipeline in the way of news, and I probably would have, you know, especially on the next day, and that's why you got a bit of profit taking the next day. The good thing is, this, to me, I'll get my drawing tool. Oh, that's not what I want. It looks actually quite good. So they've got the fact that this gap is closed, and it was on, you know, some good volume come in the next day, a bit of sell volume, but it's been holding, which is nice too. So you can see this sort of a mild trend it's holding. So it's really that reversion to the mean. You can see I don't mind stochastics going for that overbought mark back to oversold. A lot of the heat and momentum's come out of the market, but it's going sideways. So it's, to me, it seems to be holding a higher level, capped around sort of that 17 cent mark and probably supported around 14. So as long as it holds 14 and we start to lift and get up through 17, I think it could look pretty good. So TMZ potentially, you know, it's starting to lift again and it's going to be back on the rise. So if we go back to a weekly chart, I'll just take off this news. Look, it could have another run to 25 cents. It seems to be supported. It's not, look, it was vertical then, that big sell-off on the weekly basis, come back, reversion to the mean, like I said, profit taking. It's getting soaked up at higher levels, still looking okay. We'll just see if that can continue. WEL, what's that one there? On a weekly, it's just sideways at the moment. Winchester Energy. Yeah, it really, the weekly chart's not showing anything. If anything, it's whoops. I just want to get a bit more data. If anything, you can see this inside level, which held just, you know, around that 3 cents mark. It sort of pulled back here, popped up to just below 3, bit of a sell-off, found some buyers at 2, went up through, you know, touched on 3, got rejected again for a second time. So potentially, and then this week here got rejected again on around the 8th of Feb, or that week, I think it was beginning the 8th, got rejected again. So it's hovering around 2.2, 2.3 cents. It's hovering sideways for me. So if we go to the daily, yeah, the daily's not showing anything either. MA's down. It's really, you know, if you're going to buy that, you're probably going to buy off 2 cents and just winging it. I don't see, there's no momentum in that. There's no, if anything, it's just a very, you know, bit of a momentum play on the downside more than anything else. But I'd say it's more consolidating sideways. What you'd ideally want to see with this one, or you'd be waiting for, is a lift. Okay, so you've got this level here. Okay, we know that's coming to play. It's coming to play before, and that's off a higher level. Okay, it's coming to play a few times here, come back, you know, just above that level, come to play here, come to play here. So it has come to play a few times. The problem is you've got lower high here, than here, lower high, lower high, lower high, lower high. So it's still, lower highs mean there's sellers jumping in, sellers edging out. They want out. Anyone that's long, potentially seen it go nowhere, see it rally up there. You've got the lower high in the play there. After this, you know, this whole, get myself all muddled up there. That zone there, you got to run up. You got a shoulder. A shoulder means it's struggling to get back up. So you'd be selling after you see that shoulder off this lower high compared to there. Does that make sense? So there is still some selling coming into the market. So you really want to see that dissipate, and you only see that dissipate when you can see that it's finished and buyers are starting to take control. Is when you get a little pop up. You might get a run up through that 3 zone, and you get a pullback, and the pullback gets support, and you want to see that volume. Okay, so you're sort of looking for a run up through 3, maybe retest that area and lift. Then you've got some volume coming in. Then you're seeing buyers support it at a higher level. They're getting a bit more enthusiastic, especially after that break. They're looking to jump in and run it up to a higher level. Okay, you're not going to be 100% guaranteed that it's not going to do the same thing we did here and start to sell off back down to 2 again. But at least you're buying on the rise. All right. and you get on the right side of the market. But if you're just sitting on the bid just above 2 and you're buying the pullbacks of 2, who's to say that's not going to go? I mean, this stock goes broke, for instance, it goes back down to 0, or at least down to 1.5, half a cent, and you'll be sitting there for the next year holding a struggling position. So at the moment, overall, longer term, it's moving down. The pressure's down. We're starting to find some interest around 2, but it hasn't proven itself yet, because all we're trying to judge is the interest from buyers greater than the interest from sellers? Is it going to outweigh the selling pressure? There is some selling that's coming in. Buyers are starting to show some interest, but they haven't proven themselves just yet. Okay, so that's that one, Srg. Srg Global. Now that is more on the rise. So when you're looking at things, we'll just go to this weekly chart. Forget about this. I just want to talk about so this is kind of the high we'd be looking at, somewhere around 60. Potentially this level in there is going to hold around 30. It flushed through there, it's just brought back up again. Or whether we're going to get a lower high in here. This is off the weekly basis, so it spent a lot of time going sideways doing not much. All right, are we on the rise? From the weekly, you could argue we're still holding the lower high. We're potentially looking to hold a lower high just in here, in this zone here, somewhere around here, which would mean on the daily you should find a bit of pressure. Let's just see what's showing us on the daily then. On the weekly, the volume that's capping it here is potentially, it's... Okay, let me just step back a bit. What I'm looking for, you've got this run up here, you've got the market sideways here, a bit of volume to push it up, a bit of volume to push it up, okay, but less volume, the second push. Okay, so potentially we are coming in a bit of a problem area, and there might be a bit of a selling coming in. You can see the last few weeks have been pretty wicky on the upside, meaning popped up to 50 a few times now. You've got 1, 2, 3 candles just rejected off that 50 area. And we're starting to get momentum potentially rolling over. You can see momentum on the MACD potentially rolling over, running out of steam up here. So is this an area where we've got to be concerned about if you're long? We'll go down to the daily. What I always like to see is I want to see a push through the highs. So if you start to pick out the most recent high and see how well it pushed through those highs. Did it push through with conviction, or did it push through just on a minor, on a weak sort of push? That makes sense. So if you're looking at this level here, at that stage, we're in a downtrend. We've had this sell-off, we've had that sell-off, consolidated through here, went nowhere, sold off again, we consolidated. So if you're in this area and you see this little pop-up just here, and you're buying, or you're looking to buy, you don't know whether this is going to pop through here and just pull back and we're going to fall apart and go back down through 17.5 cents. But as it played out, it sort of held that level, so you can see that the conviction was getting a bit more. We started to hold that again. So this is the most recent high. We got up and through that high pretty well. So you got your lower high in here off the support, which is off that sort of 28, 29 zone. You've got your high in here now that we've consolidated. You can see the market's pressed up, consolidated sideways a bit, took off a bit, got up to this 42 area just in here, consolidated sideways, which is a good thing. Okay, it's quite clear, consolidated and broke out again. The thing is, this time around, I don't think it's got up with a lot of conviction. Okay, like we had here, we got conviction and pressed it up and through that high, this high in here, and really extended through that high before we consolidated. Consolidated sideways, so that's a positive move. This time around, we sort of popped up, rejected initially, and then got up to 50, where we found sellers in here. Okay, so for me, I'm a bit skeptical that this is going to continue, and we had a deep correction. So if we just go, I just want to drill into this area now. This area now, I'm not seeing the conviction, what we saw in the past. The conviction through here with it holding, and the market really not pulling back much at all. It's pulled back from about 44 cents down to about 40. So it had 4 cents. It kept getting supported here. Whereas this range, we've gone from 50 down to 42. It's 8 cents. Big sell-off here. I wouldn't have expected this kind of a candle after an extension higher. I would have expected more of positive candles. Does that make sense? Positive green candles really ramping up. Instead, we've got one move up. The next day, sold into. It did get bought up. Then we've seen some selling. Tried to press up here. Didn't get very far before we get a couple of red days in. Okay, got bought up again. But then we failed again here. We'd failed to get up through there and we started to find some selling again. So, there is a bit of selling, and this kind of push up through 50 intraday, finishing back below, doesn't leave me with a lot of confidence. Okay, so I wouldn't mind seeing personally a flush through. This could be all part of a bigger corrective phase where the market's got to correct, got to flush, put some more people back on the sidelines before it gets bought up again. But we'll see how it goes. If it can just consolidate between 50 and 44, even slightly higher, 45 or so, then great. Okay, but for now, I'm not seeing any, it's definitely not seeing any setup for now, because again, you want to see push up through a level, which to me, the level is going to be around, say, 50, this sort of zone through here. You want to see it press up through there. What happens on the first pullback, and then look to buy it, okay? And look for a strong move up. And if you don't get this kind of a move up again, you got to start questioning the strength of that move, okay? So for me, yeah, the trend is up. But whether we're running out of steam here, and it's got more to do with that weekly base, maybe we need a deeper correction. The weekly's running out of steam. Now if the weekly's running out of steam, there's going to be more available buyers willing to get out and sell into market. You're sort of running out of buyers now. We might have a bit of a pullback. We'll just wait and see for that one there. So for me, I'll be a bit of a holding pattern there. SZ Sezzle, is it? Sezzle. So you can see the strength. This move up here, okay, we had our corrective phase. We took out the lows. Let me just draw that. This run up here, we've had a good leg up, and that's all part of one leg. And this was the anchor. You had little anchors all the way up, anchor in here, bit of consolidation, then expanded higher. Great. Then we just turned around and we broke. We tested. We come all the way down. So when it comes all the way back down again, and you're buying anywhere sort of above here, you've got to question that. You have to question that. A strong market doesn't pull back like that. Okay, that is, clear and simply lack of buyers willing to sit on the bid to soak up the selling pressure, and maybe more sellers coming in. And by sellers, I mean people that may hold it long. They might be long from here, anywhere prior, but they're looking to sell into the market, whether they're just loading up on the offer or they're starting to hit out on the bid, meaning pressure price lower. And it's just a weight of numbers game. When you get this kind of a pullback, you know that buyers are not willing to step into support price up at these levels. They might want to see a deeper flush, but they're willing to sit on the sidelines and wait and see what happens. Then you get a bit of a bounce. It can only get so far, around $9. It can't get back up to the highs. So when you start to back off from that level, you'd be questioning that too if you're going to buy. So for me, if I'm looking at it around here, I'm just looking to see where I potentially think we're going to get this. This is going to be a lower high, and I'm looking to see where is it going to go to. Okay, this is clearly an obvious level. So if we just clean that up, I'll just clean all this up. It's an obvious level just in here. Because we touched it. That was sort of the anchor to that move up, this leg up here. We've come back down and traded slightly through it, but held. Got a lower high. You expect it to come in that level. Okay, we've flushed that out there. No real conviction. So when you're looking at this move down here, not a massive amount of conviction from the sellers either. The fact that we sort of popped back up above that level and then we went sideways here was a good little buying opportunity. Okay, we started holding back above that level. You know where your risk is going to be. You can buy on the break on the upside with your risk just below. This action through here, we started to get a higher low form, which is in here. The higher low, if I just circle that in there, was just in there. Market's holding, going sideways, starting to lift. Okay, so that's good. That was all part of, if I just mark it up with a different color, all part of one leg up, corrective phase, and we're in our second leg up. Okay, so if that's our second leg up, where are we going to find some pressure? Where may we find some selling pressure? And that's potentially going to be just into these highs again, which, right now it did react off those highs. You can see a couple of red candles, bang, soaked up at 10. I'd be I'd be inclined to see, I want to see 10 hold, but I wouldn't mind seeing it back off from here. Just consolidate below. So when I say consolidate below, you can see that the market's pressed up into the level, it's pulled back. I want to see some sort of consolidation below that level. Now, what that does, it gives me two things. It gives me confidence we're consolidating just below that high and we're starting to hold. I know where I want to see it break and I know where my risk is going to be. So if I'm new to this trade and I'm looking for this big yellow extension to continue up and through 12, I want to see it consolidate through here. I'm going to basically look to box up my trade, buy on the break, because I know it's on the rise, market's starting to expand, and my risk is going to be below that level. Okay, it's as simple as that. But if you just buy within this contractive phase, you don't know whether that's just going to continue its way lower, okay, and just continue to grind all the way back down to $6. So that's why you're trying to read the price action, you're trying to read what's happening, and where are you going to be proven right or where are you going to be proven wrong. If you buy within that zone, you're risking the fact that you're going to be wrong and the market's going to have a bigger sell-off. It might break to the downside. You get a bigger sell-off. This is a confirmed double top. You know, we're breaking. This leg up comes into question. You're not so much going to get expansionary phase, pullback on the weekly. Expansionary phase is going to take off through 12. We're now starting to find a bit of pressure at 12. As soon as you start getting that double top off, I'm talking about this yellow move, you start getting the double top up here and we start to fail that, then you're going to be looking back down to these lows at around 6, okay? The market might have to pull back all the way there, consolidate. It might go into longer term range bound action between 6 and 12, and then it's not where you want to be stuck when you've bought at 11, 10, 50, 11. Okay, so that's why I'm saying that if you can sit through this consolidation, you can box it up so you know if I break to the upside, I break through this level, I'm proven right. The market's starting to rally, and I'm going to buy on the rise. I know exactly where my risk is if I'm wrong, and you want to see it get up through 12 and just 12, 13, 14, and so on. If you don't, you start to fail again. You've got to start managing your risk. Okay, but either way, it's kind of, for me, it's a no-go zone when you see something like this. Through here, I'll just draw that in a different color. No-go zone when you're trading in this kind of consolidation phase. When it is consolidating, it's more you want to buy on the rise. Okay, you're looking for that to power up, buy, and you're sort of buying in here. You might buy that break there. You risk below, and away you go. Okay. Hope that makes sense, John. If you're long, your risk could probably be tightened up depending on when you're long, where you could be long from. Does that make sense? Thanks, John. Thanks for letting me know. I hope you saw everything that I was talking about. You can see the chart, the copy of the chart. Probably not on the on Spark, but you saw the copy of the chart. I always forget to do that. After all these years, still forgetting to do that. So does that make sense? If so, we'll get on to IVR. IVR, you can see, is kind of that minor contraction, which you would expect after a good gap up here. Expansionary up, we got that gap, it took off 11.5. It's been sold in 2 cents, so it's got to consolidate. So if we just go back, we just look at this price action. What I'm looking at is you've got this move up here where you could you could probably take it back a bit lower. If you're taking this longer term trend up, you've got the low here, a low's in play there. This one particularly not really coming to play. Then you've got this zone through at 7 cents into play. Maybe we're going to get some heat coming out there, but if what we're looking at here is potentially this kind of, I don't know what you call it, I always keep a wedge formation, or are we going to see 1, 2, a secondary move down? So this is the move up, your first move down, and this is all part of a potential secondary move back down. We're going to go back into 7, where we're going to find some buys, continue that longer term trend up. So these are the sort of things that are going through my mind when I look at this chart. Just clear that up. Actually, I'll clear it right up. Get right back to here. So this is your longer term trend up. Okay, we know we've got this wedge forming. Like I said, are we going to have a secondary move back down? Longer term, we're going to start to hold up through 7 and lift, or are we just going to go break up and through? So again, a bit of a no zone there because you don't know what's going to happen. You don't know if it's going to be that second move, Or are we just going to lift off a high low and really start to get a bit of a run on through 10? Okay, back up through 10, which means you're going to be going back through 11.5, and we're going to have a good run higher. So at the moment, we don't know that just yet. So again, you could potentially box up your trade, 9.7, 9.8, buy on that break there. Just watch out for that 10% move, 10, 10.5. Starts to get up through 10.5, 11, then okay, happy days. Buy the break there. You know where your risk is going to be as long as you hold these high lows. Okay. If we don't break there, we're probably going to break down lower. So the good thing about these wedges, when you get lower highs and higher lows, something's going to happen sooner or later. It's just a matter of time. All right, so that's the way I'm viewing that one. We'll see what plays out there. OML, Gino, you bring that one up. I don't like OML now. We got stopped out of that, of course, before we got today. I think it was stopped out on Friday with the sell-off on Friday. Great. Took out the most recent lows through $1.50. We had to stop at $1.58. Probably got to down to $1. So we had at $1.48, and it got down to $1.45.5, and now we're back up, 11% today. That's awesome. So don't like it, not happy, but it's not just because we've got a solid day here. It doesn't mean that we're not going to roll, okay? Or doesn't mean that we're going to go back up. Not a massive amount of volume just yet. We should look at the daily. Good volume on the daily, but it may need to hold. So what I'd be looking for, your trusty high or low. If we can pop back up, sit on top of the MAs, I might be tempted to jump back in again and look for another entry. Okay, but for now, the fact that on a daily basis, we've gone up, had a decent pullback. So all this kind of action could be the same as what we're starting to see now. Okay, I want to see this kind of action when you get back above the MAs. We could go consolidate sideways and we start to lift off the MAs again. Then I think there's more emphasis, there's going to be more oomph to a trade on the upside. But for now, I don't like to see you go below the MAs, we go back above the MAs, we go below the MAs, we're back above. We bought it in here with this break of this little lower high, thinking that we're going to hold and we're going to rally. Instead, we come straight back down again, took out this low at around 151. So like I said, we got stopped at 148, got a few cents lower and straight back up again. That's not the kind of price action I like to see. I want to see it. We could just oscillate. So essentially we could just go sideways between 175 and 145. 20-cent range could sit in there for ages. So if you're going to buy it right here, there's going to obviously be that risk that it comes out of the range to the downside. Okay, rather than pop up to the upside. So OML for now, I'm happy to steer clear. What you'd want to see on a daily basis, it's in the zone where it's only after today where there is the possibility that it could get held up, but I'm not convinced just yet. And that could be me just because I got stopped out. I don't like to jump straight back in again. So I got it wrong. I don't know why just yet, and it hasn't proven that it's going to set up again. Finish off on MX1. Actually looks really good. Obviously, what's the kind of volume? 39.5, 40. Then it's not big. Very low volume on the upside, thin on the upside, stacked up on the buy side, which is good if you're a buyer. Price action's pointing higher, no doubt about that. And the weekly, that's looking nice. So what you can see, this kind of trending down, lower highs, lower lows, gradual trend, bit of a sell-off. It started last year with that sell-off in Feb, but it didn't get hammered too much. It started to hold up at the 10-cent mark. Then since we've been rallying, when was it? Since March, was that Feb? So this green candle was in Feb. Probably got knocked down just after that because of it was a sell-off across the board, but it held up around 10, retested 10, and started to lift. So the fact is, during that sell-off, it didn't get hurt too much. But since the market's been going in a bit of a buying frenzy since March, April, May, bit of a buying frenzy, it's lifted quite hard. And what we're seeing on this weekly chart, it's lifted, consolidated sideways, and it's starting to lift again. So probably a breakout of 40 is going to bring in a lot more buyers, I would suspect. And you can see that 40 is touched on in 2018, early 2019, tried again in late 2019, then got sold off from there. But it is a good level. End of 2020, it traded through it, finished back below. The fact that it's finished back below would probably be a bit negative, but the fact that, I've lost my mouth, the fact that it's actually consolidating sideways and we're starting to lift again, I think it's a good little sign. Okay, so for me, the pressure is going to be to the upside on MX1. In fact, the fact that it's thin on the sell side means that people are probably willing to hold it. No one short is going to be jumping in here, and I think it's going to be a bit of a squeeze to the upside. So it's looking quite good. For me, I would just be wanting to see pop through 40, the pullback. If the pullback gets supported and a bit of volume back on the MAs, then it could be a buying opportunity. But if you're long, it's looking positive either way. I think that's probably going to be the play. The only reason I would be waiting for a pullback, I don't want to see a break and pullback. That's just not my style. But this thing could just go straight up through 40, take out these highs and just bang in one direction without a pullback. So if you're long, great. You can sort of lean on the price action at the moment. All right, that's all I wanted to go through. The market is sort of down 7 at the moment. It's really not doing a hell of a lot. It's still relatively choppy in my mind. That's not conducive to really bullish action. Maybe we're just flushing people out. I don't like it. Let's just see what the SPY is doing. This is the SPY. I mean, that you can see that action there. It popped up on the open. It was looking good. Straight back down again. Pushed up. Reacted off this 67.35. Reacted. Went through it. Trade up to the highs. Straight back down again. So there is selling coming into the market. And you can see through the ASX. This is not great price action if you want to get long. So I'm happy just to sort of sit around and watch this for a bit and see how we go. Anyway, guys, that's pretty much it. If you've got any questions, feel free to send us an email to support@tradesetup.com.au. And thank you very much for joining me. And it'd be great if you can leave us a like after this. We help us spread the word, like I said. For anyone that doesn't know, I'll be talking on Wednesday on Spotty. So if you don't know what Spotty is, go to their website. I think it's www.spotty.com.au. Go on there. You'll see there's a whole lot of different bits and pieces on there, but you can join in. You'll find out the details for the actual program. This goes for 45 minutes, and it's talking about shares and bits and pieces. You can actually send something in. So it'll be the presenter, myself, and someone else on that, just talking about different shares and potentially the Aussie dollar and crude and things like that. So, yeah, feel free to join in. You'll see my ugly mug on there. Hopefully I can get a haircut and have a shave before then, or at least get a bit cleaner and tidier. All right, guys, enjoy the rest of your day, and I'll speak to you then. Bye.